Hey, welcome back to At Home with Homestead. I'm Brendan Beatty, and with me again is my father and managing director of Homestead, Paul Beatty. And we're here to talk more about what's going on in mortgages. Trying to inform you guys with the updates as we see them, as we're seeing them across our industry. And the big one today is change. Everything has changed. Hasn't affected our industry any different, and we've been experiencing a lot of changes across our lending partners, across our day-to-day operations, and just some logistical stuff. So Dad, if you want to comment on where we are today and how change is playing a part.
Yeah, it's become the only thing we can count on being consistent. There's going to be change every day in what we're doing. Some of the newer ones, the newest one this week was the cost of doing a cash out refinance. A lot of people were looking at doing a cash out refinance at these times, and I think it will be the case down the road a little bit. Rates are pretty good. Rates are going to get better. People have created some debt. This whole pandemic has created problems for people financially, and they're going to create some debt as a result of it. And doing a cash out refinance would be a tool that many could typically take good advantage of to put them in a little bit better financial shape. However, this all goes back to the pandemic, to the forbearance, to the government stimulus package. And cash out refinance loans, if they go into forbearance, are not they're not going to be purchased by Fannie Mae and Freddie Mac. So it's causing the lenders to say, man, I'm not going to do this cash out refinance unless it's a real clean list. Frankly, they're not doing any loans at reasonable pricing unless they're a small risk. So the cash out refinance, hey, if you have a middle of the road FICO score and you're looking to get 65, 70, 75, 80% loan to value in your cash out refinance, you're going to pay 3 to 6 points to do that, depending on your credit score. And it's just not worth it for a lot of people to do it.
Yeah, that's what we've seen across a lot of our rate sheets. Some lenders had started pricing those aggressively prior to the FHFA announcement last week. For those who didn't follow, FHFA is who monitors the Fannies and Freddies and maintains their decision making. They did announce some expensive relief to customers in forbearance, or to servicers who are servicing customers in forbearance, where Fannie and Freddie will still buy those loans from them and allow those servicers to get loans that are in forbearance off of their books and hopefully maintain some kind of stability. Very expensive, at some incredibly expensive number to the servicer.
700 basis points.
700 basis points. So very, very tough to get those loans off. But one thing they said, they won't buy these cash out refinances. So they've gotten very expensive. Fortunately, I closed one this week for a friend of mine. But we were, before we close, we're always double checking our final options to make sure we make the right play. There was no other options. The one we had submitted and locked a month ago was the only loan we could have gotten done for him this week. So that's something that's changed. Low credit scores has also been something that's been attacked in a similar vein. Lenders are looking at these forbearances and seeing which loans are maybe the most likely to not be paid back. And what they're seeing are, certainly some of these riskier products and the lower FICOs. So, as a broker, we're seeing how lenders are reacting to this in a variety of different ways. Some lenders are still in that ballgame. We have some lenders that we work with that are still doing the 600 FICO government loans and still offering them. They've gotten much more expensive than they were 2 months ago.
Yeah, they're charging for the risk, though. You're paying a lot for that risk on that loan.
Yeah, and other lenders we see have changed their standards entirely. They've raised the minimum FICO to 640, or even more aggressively so in some retail banks that we've heard out there. I know Wells Fargo, I think, stopped doing anything under 700.
Yeah, 700.
And what's been wild is how every lender doing the same thing. We're all writing mortgages, and we work with maybe a dozen or so. They're all reacting very differently in what their rules might be. Some lenders have told us we're not taking any more business for the foreseeable future from certain channels.
Yeah, big ones.
Yeah. It's on our end, it's been ever important to stay on top of what each lender is changing and how often they're changing. On the consumer end, it's going to be very hard to navigate through that when they're not hearing the direct feedback on what's changing. My best advice is to talk to a few people.
Yeah, we're doing things internally that we've never done. I mean, like you said, we work with a number of lenders, and we're always pretty steady. We typically work with the same 1 to 3. Really, we had others signed up, but really the major volume went to the first to a few. Man, we just can't do that anymore because it's changing literally every week. Who's doing what? Who's allowing what? Who's put in more overlays to make it more difficult or more expensive? And now we've gone the other direction and started adding a couple of lenders. And now I feel a little bit not foolish. It's the right thing to do, but like it's almost like, hey, we got to chase a bucket that we need, and we can find it with this lender right now. Now I don't know if they're going to offer it next week, but we'll get signed up with them, and hopefully they'll have it.
Yeah, it's funny. I mentioned I did that cash out for my friend there, and I closed two with that lender this week. We had never worked with them until February, and then 1 week during this pandemic, they were the price leader. They were the best rate in the game, and I think Homestead probably sent over a dozen, 10, 12 to 20 loans there during that week because they were the price leader. This past week, I don't know if we sent any loans there because they're just no longer the price leader, but they're also no longer really in the ball game in terms of speed or time it's going to take to get things done. It's evolving daily, weekly, often, sometimes hourly.
It's not as bad as this, but there's a little bit of it's a little bit like it was in 2007, in that we would, with the subprime lenders, we'd have a loan in process, and like, okay, I put it with option one or whoever it might be at the time, and you get near the option one closed business. We had lenders closing business, shutting down at the closing table, saying, no, we're not funding that loan, and it's done. We always found another home. You found another place, before it all completely imploded. But this is a similar in the effect that, all right, these people aren't blowing up. The industry, the world's not falling here. But you deal with one lender, and all of a sudden, okay, now it doesn't make any sense. I got to move the loan. I can move on the loan. So we're doing, which we never do either as a company, but we're doing a lot more movement of our loans to different places too.
Yeah, I mean, oftentimes by the time the appraisal comes in or the title work comes in or by the time the borrower is ready to apply, we may have had a plan to refinance them 2 weeks ago, and they were getting their information together, and maybe things have changed. So some of that has happened, and certainly those who have been put out of work have been directly affected. There's few lenders out there, any lenders out there who's they get those. So a lot of that has changed. But even some of the logistical stuff day to day, what the title attorneys do, what the appraisers do, what some of the daily operations of getting a mortgage done have changed drastically. What's happened with appraisers?
Well, the appraisers, I mean, it's not a good thing, but most of the marketplace, if you buy a primary residence, you're doing a rate and term refinance, you're fine. The Fannie Mae, Freddie Mac, Ginnie Mae, they're all allowing desk reviews, so that they don't go out at all to the property, or they're allowing external only appraisals, so the appraiser doesn't have to get into the property. Appraisers understandably don't want to go into these strange properties right now that they don't know the people. They're just not going to do it. So they've opened that up by allowing these drive-by and desk reviews, and which has helped keep the marketplace moving. If you're doing an investment property, they'll do that with a second home too. But if you're doing an investment property, they're not allowing that. They want people to get inside. If you're doing a second home on over 85 LTV, they're going to want you inside too. But they've loosened that up enough to try to keep the marketplace moving. You can correct me if I'm wrong. I'm not sure on this. I think cash out refinances, you may need a full appraisal too, which would also be.
I'll double check with Fannie Mae. I know the FHA loan that I did was a cash out FHA, and we were given an exterior appraisal.
Okay, fine. No, I think you probably did that then still. Yeah, that's still probably okay.
FHA did allow the same. VAs allowed the same. These exterior appraisals, which is big news because particularly these government loans always required photos of crawl spaces and proof of peeling paint and rotted wood, and obviously without visiting the property or doing a minimal inspection of it, we're not going to see those things.
Yeah. The cool thing is everybody in the industry, including Fannie Mae, Freddie Mac, Ginnie Mae, none of the rules have changed, right? We're talking about everything's different, and it is. Fannie hasn't changed their rule. Freddie hasn't changed their rule. Ginnie Mae hasn't changed their rules. FHA guidelines are the exact same as what they were 3 months ago before this pandemic. What's changed is how lenders need to react to the environment due to, in large part, the stimulus package, which had a lot of great benefits to it. It was great that they put out that forbearance. We talked about that last week. But it's also causing some unintended consequences with how the lenders have to protect themselves
as a business risk.
Yeah.
But no, the appraisal has been a good one. Massachusetts this week, or in the past 7 days,
Yeah, good news.
authorized the use of e-notarization. For those who don't know, Massachusetts is one of the states in our union here that require an attorney present at the closing to notarize the legal execution of your closing documents. And fortunately, we have a lot of great attorneys, and they were one of 10 states up until this coronavirus that didn't allow any digital form of that. E-closings have been happening across the country for the past year and a half or so. Various states have implemented those resources, or that availability, that technology, in a legal fashion. Massachusetts had not, but last week they temporarily did authorize that, at least until the emergency order here is in place. So I know a lot of our attorney partners are working on putting that in place. There's some logistical stuff that needs to be figured out. They got to get the right technology. They need to be secure. They need to make sure that their insurances and their policies and compliance reasons are all clean and cut and safe for the consumers still. But that could be a positive change going forward.
Yeah, I think there'll be a lot of positive changes. I mean, I think what this is doing is it's enabling the e-signings, which never would have happened, the e-notarization. The state probably would not have approved that, but they did, which I think is really helpful to the whole closing industry. The appraisals, just the fact that this is allowed now, I think some of these will carry over into the post-pandemic times and really make life a lot easier and smoother for your transaction. The other big thing that we talked about that's going to happen is, hey, in the next several months, rates are going to be better than you've ever seen. So hopefully some of these get lifted, and people will really be in a good position to take advantage of those good rates. Important thing is to keep your credit stable as best you can during these times, so that you'll be in a position to take advantage of that then.
Yeah, I always like to end with that topic here. I know times are hard, and the economy is in tough shape today. Unemployment is again a new high. This week was higher than any other week prior to this month, but another 3.84 million people filed for unemployment this week. And things are still tough, but by all means necessary, by all ability necessary, maintain your position as a borrower in the future. Talk to a loan officer, talk to a couple loan officers, have them look at your credit if you think you might need help. You can put things into place to stabilize these things. Minimum payments on credit cards at the very least, automatic payments on things. If you are getting relief in any form, and buying a house or refinancing your house in the future is a goal of yours, there are steps you can put into place today. There are things you can do to be that really good borrower. So no matter what the rules change to, if they get tighter, if they get looser, if they change entirely, you'll qualify. You'll be there. You'll get those best options. And if any insight, a licensed loan officer, particularly your independent mortgage broker, the local businesses in your community that are full of well-trained, well-knowledged people that really are just here to help. And talk to them. We're available. We're working digitally. We can do Zoom meetings just like this. I had a great one yesterday where we looked over loan estimates. We looked over pricing. We talked about different loan programs, and I was able to share my screen and really get deeper than I can in person, because they can see everything I'm seeing right on my screen. So some of this technology, some of this has been beneficial to educating consumers, and that's what we're here to do today. So if you have any topics you want us to cover in the future, feel free to reach out to your channels at Homestead. If you want to join us here in the future, if you're in the industry or even on Cape Cod or here in Massachusetts and want to talk about something that's affecting your day here, we're here to talk to. So thanks again, Dad. It's always a pleasure. We'll do it again next week, I'm sure. And maybe we'll have a digital beer later on tonight through this channel as well.
Thanks, Brendan. I think we'll do that. I'm going to have a scotch, but yes, we'll do that.
All right. Sounds good. All right.
Cheers.
Thanks again for joining us. This is At Home with Homestead Volume 2, and we'll see you for Volume 3 in a week or so. Take care.
Cheers.